what's up guys, welcome back to Untitled Tech channel. So today in this episode, what I'm going to do is I'm going to introduce the basic concept of price action. So I'm going to provide a guide for your, a lot of people want to learn about technical analysis, but they don't know where to look at. So in this video, I'm going to provide a brief introduction of price action. And if you want more in-depth information, you can add my Patreon. You can start support my channel, or you can subscribe my YouTube channel. Right. So this video I'm going to make like two versions. I'm going to make a Chinese version and also English version. If that is necessary, I would most likely to put on a Cantonese version, because apparently I have many Hong Kongese subscribers. So in these videos, we're going to look at all the basic concept of price action and how we're able to use and apply that technical analysis into trading, the real market trading. So a lot of people have been arguing with a question, which is how important is technical analysis, and how can we apply that technical analysis to trading, and to a point where that you can actually make money and grow your wealth in the financial market. So my overall conclusion to that question and my response to that question would be technical analysis is very, very important. But due to my experience in past more than 10 years of trading, that I realized most technical analysis may take up to maximum 30% when it comes to making the right trading decision. Because trading is not only about technical analysis, it's also about the fundamental analysis. So you have to combine the technical factors and also the fundamental factors. Given the two factors, that you'll be able to put on different market orders, maybe limit orders, so you can trade in the financial market. So today I will use this handbook as a material, basically giving you a brief introduction of technical analysis, of what technical analysis is. So first, by looking at the table of contents, what is price action trading? So price action is basically about those price. You always look at the maybe the technical analysis. You see different support line, maybe resist line. You see different candle charts, and so price action is something like that. So it reflects what the price is moving at, and how this momentum and where it goes, right? How is this momentum working, and how and what would be the direction be like? So the fifth page is about read a candlestick chart, and also you have an introduction to the candlestick, trend lines, most importantly support and resistance, and candlestick patterns, and you have a long wick patterns, and you have 3 candle reversal patterns, checkmate patterns. So, and also have these risk management and price action trading, and about these confluence, and also trade examples, and how you be able to reduce your learning curve to boost your learning efficiency. Okay, of course this is a handbook provided from a FX provider, but apparently this YouTube channel is not working with any of the Forex service provider or CFD traders. So just let you know that I'm not getting paid to use this material. So I get this material from online, and then I thought it would be a great material to show you guys. So this is the reason why I have this handbook. So this is an open resource. You can go online and you can simply type price action in the Google, and you'll find all hundreds of different copies of different, these different handbook. So price action method is a trading methodology which refers to the practice of buying and selling securities based on the market volatility and also fluctuation. Simplified speaking, the action of the prices. So all these price changes we're going to be demonstrate and reflect in the easily readable candlestick or bar charts. So which these all of the charts and all these signals are the bread and butter of the price action trader. If you learn about trading options, these price fluctuations could be viewed as volatility, but this could be a very complicated term if you are not, familiar with option trading. So price action traders often rely on naked charts. So they reject the inclusion of indicators with the conviction that, all indicators are lagging interpretation of the basic data. So they will rather look at the price itself. They will rather look at the patterns of the price movements. So this is the methodology of the price action trader, and price action system is proved. I'm also applying price action in many scenarios. So me personally think that price action methodology is very useful when you apply to trading technology, when you're trading financial markets. Okay, so you're going to see different concept. You have trends, candlestick patterns, you have price level such as support and resistance, and etc. So here, what you're looking at is a typical naked price chart, right? There is no information, there's no, like Bollinger Band, or maybe all these Fibonacci, retracement, all of these difficult and complicated concepts on the chart. So that means it's naked, right? It's naked candle chart. So you see, this is a daily chart of dollar and Swiss franc, and currency pair. So charts can be made at any time scale. Okay. This is what you're looking at here. It's the structure of candle chart. So you're seeing a bullish candle and also a bearish candle. Here you see a high. That means the stock price, or perhaps the FX currency price, hit this high and fluctuate from this high to this low. So the market will close here and also open here, right? So this is when the market close, right? Because this is the bullish candle, so that means the closing price should be higher than opening price. So the open means the exchange or the market. When the market is open, this means the exchange is open. So when the close, it actually means when the exchange is closing, so where the stock price or the underlying price is actually moving up. So here you also see another bearish candle. Because this is a bearish candle, means the stock price, or maybe the underlying price or currency price, is heading down. That means this closing price should be lower than the opening price, right? Makes sense. So here you're seeing this upper shadow, or you see this lower shadow. That means the stock or the underlying actually fluctuate from here to here, but it's not hitting the actual high or the low. So the space right here, we call this shadow, right? So this is a typical candlestick pattern. So, and then what you have to learn is also about simple trend line. So when you're doing a lot of traders draw a lot of charts. So they have to understand how to apply all these technical, all these indicators. So what they're going to do is they're going to draw a trend line. So here you see this trend line here, bearish leg, bullish leg, trading range. So we call this range because the stock price on our long line prices is hitting the like in between of these two levels. So right, you're seeing the price fluctuating right here, and then after that you're seeing this. This is a general uptrend format. So you see the price is actually increasing dramatically right here, and you see another range right here. So what does the lag means? Okay, this general uptrend contains the numbers of lags, small scale price trends, not necessarily alternate between uptrends and downtrends. So you have bullish, bearish, and bullish lag. So these lag are the small momentum, maybe inside of the bigger and the more general, uptrend or maybe a downtrend. So you're seeing all these small, momentum right here. But as an experienced trader, I don't really recommend traders to trade all these small patterns because these small patterns can be very delusional. So what I'm supposedly that if you have enough margin, you can trade here. I would, suggest you trade these two sections right here. Okay, so there are a few basic rules to bear in mind when drawing trend lines. So first of all, tentative trend line. So this is a diagonal line. The market bounced off twice. You see this hitting twice. So this trend line is indicative of a potential trend, but not yet being confirmed. So the second could be a confirmed trend line. That means the market has bounced off this trend line for 3 times. So that means it is confirmed. Maybe this has hit it twice and then the third times. So when you hit it the third time, that means this is a confirmed trend. So you can, maybe start trading, adding maybe a bullish trades on your trading accounts. So this is a tentative trend line, 2 points or touching a line. So that means the market may go up, but it has also probability of going down. But if the points has been hit like 3 times, so you can almost certain the momentum is quite, which is a certainty rather than a possibility. So it's very easy to trade high or low closely to a recognizable line. So here, price, you see when you're drawing a trend line, is very important to find the market low and the market when the market, it's turning around. So this trend line was touched 3 times. See here, early on. So this is a validated trend line. Okay. So you can find some, like this is a great, bullish trend trading opportunity, but realizing you have to close your position right here, but not more like, not, unless you're like super trader, I don't think most of the people would, be able to, close the profit just in time. So as you can see here, market could, all these price momentum could go against of your will very quickly. So here prices have pulled back to the trend line that was previously confirmed. For traders who wish to trade with the trend, this may be a buying opportunity. So here it's very important technical terms, which is support and resistance. So here, this line here, this is a support level, right? So here, this is a resistance level, maybe here. So this is the upper shadow, right? Here, you see when every time when you see this, you have to learn how to draw buy and support level. So maybe in the next video, we'll talk about how to draw this support and resist line. So, okay, so the time, you have different patterns. We can, spend a little bit of time looking at it. So you can further familiarize yourself with all these technical patterns. First of all, this is a hanging man, or say a hammer. Here, the left side you see a hammer, which you see a down shadow, there's a downtrend, you see a neckline. So the market is basically reversing, right? The market has reversed from going down to going up. And here you see a hangman. That means it's basically an uptrend. But by the neckline, you're seeing this upper shadow, right? So the market started to fall. So you see a strong signal telling you to buy, telling you to go. This is a hangman. So hangman is a candlestick with a small body, a small range from open to close, long wick protruding below the body, and little to no wick above. Okay, so the hangman has the same characteristic as hammer, except it occurs at the peak of a trend rather than a bottom. So that each of the pattern very similar, but they represent different reversing activity. Here you see another set of technical indicators. You see this price action model. You see a shooting star, right? The market first go up and then it kind of goes backward, right? And then you see the inverted hammer, which is like quite similar, but the opposite of the previous hammer. So you see the downtrend and then further goes up, and you see a very long upper shadow, right? So here you see the doji. So this candle has almost zero range between its open and close, meaning no order. Like the market has reached to a rather equilibrium right here. So rather than implying potential reversal or the clear dominance of each bears and bulls, these candles suggest a decision of balance. That means the market is now, like fluctuating. They don't know where to head. So you see a doji right here. So a long leg doji has a long wicks in both directions, implying strong balance pressure from both buyers and sellers. What is it? It is the balance between the buying power and selling power. So here you see the gravestone. Here you see traditional dragonfly and long leg. Okay, so candle reversal patterns. First of all, morning star, a very commonly used and a very useful technical indicator. So these bullish reversal patterns plays out over the space of 3 candles. 1. Long black bearish candle. 2. Small bodied candle or doji that closed below the first candle. 3. White bullish candle that opens above the previous candle and close near the center of the first candle. So here evening star and morning star. Okay, so this is a market reverse channel, like a signal. So when you're seeing this kind of signal, it's time to close your position or maybe prepare to hedge out your risk. Okay, and checkmate's pattern here, right? Bullish checkmate. That means this as the bearish power is now draining to 0 and right now hitting this support level, and therefore the underlying prices has gained this bullish momentum to go up, which is a strong reverse of the pricing signal. So market forms a trading range after a rally. In this trading range, we see the market has high it cannot break. Okay, this is the bearish checkmate. Okay, so risk management in price action trading. Again, this is a very fundamental handbook and video guide, and I wish you guys can learn all of this and really kind of carefully read the material and then apply all these risk management skills to your trading accounts. First of all, you have to know your risk tolerance. Second, understand correlation with assets, meaning that you have to understand the fundamental that drives the asset price. Third, you should know when you will exit before you enter. Fourth, you should know your risk, your reward and risk ratio. Fifth, which is lastly, identify what you expect to happen and why, and what price points negates that expectation. So of course, these are important, but ultimately, it's up to trader to ensure that you are psychologically prepared to get involved in the market. So there are also several concepts that you can bear in mind. So enter at a support and resistance level, right? Meaning you're hitting a turning point. And then second, put your stop loss between such level, right? That will further reduce the risk when you're trading. Okay. So trading is a science rooted in probabilities, not certainties. So trading is an art, it's more of a craftsmanship. So it doesn't mean that, okay, I understand a lot of people, they are familiar with the concept of quantitative trading, but quantitative trading is not everything, right? You can still make money, not by statistical arbitrage. You can also make money by trading directional. Right? So here, this is a typical way that you're taking profit or fill your order or maybe place your order, right? So you can buy here, stop loss here, so you take profit here, right? So you see this risk reward ratio, and then your order would be placed right here, and your order will be filled right here. This is the spread. Okay. So today we look at this price action guide, easy guide, to help you to build a structure and also a framework of price action and knowing what price action really is. However, price action is a simple but yet very powerful trading tool. So I hope you guys will enjoy this content. So I think please subscribe and thank you for watching. And please, you can join my Patreon to support me for uploading new videos and sharing with you guys. Potentially, some of my tips might help you make some money or maybe helps you avoid certain risk. If you want to support me, please join my Patreon. And please share and like this content and join me with the discussion below. Right. So I will see you in the next episode. See you guys. Bye.